Good afternoon, guys. Welcome back. Welcome to the meme show. Pretty bonkers day. A pretty bonkers day. Let's be honest. Um, AMC 37% on the day. It was quite a bit higher. Every meme stock put in about twice the average volume in about the first hour of the day, and it continued. We didn't actually have much of other than volatility sort of across the market because of it, the demand sort of funneling in that area, it actually held almost across the board and has signs that there's a little bit more. It's hard to really take into consideration anything else when you have moves like this coming back. And I mean, it's not that long ago that we were just in January doing this, right? When GameStop started the whole meme stock phenomenon, and then we had serious moves across the board, right? And we traded it then. We traded GameStop before really all of it was going on, and that's kind of what allowed us to actually take advantage of the situation since we were already within the midst of a trade that was on a breakout. AMC, we were taking a trade for a very same reason back here before the move on a breakout. And when all of this sort of happened, again, it was um, it was very much a sign that you saw sort of coming, right? It was a tsunami wave of just memes and everything taking over media, everything. This situation was a little different, and it's traded a little different, and it's important to understand sort of where we are because it almost looks like we're at the climax of what's possible here, sort of like before. But if you compare what happened before to what's happening now, these are two very different things, right? This here, it looks like it has quite a bit of room. It feels like there's quite a bit of room still towards the upside, and that it can actually consolidate at a high, and that we actually haven't gotten, we have not received the same amount of demand in sort of the spurt that we did before, in that there's going to be more from today rushing in tomorrow, right? Uh, Friday tomorrow is probably going to be insane on these tickers, and is probably going to be uh, very much like the volatility that we did see in January. We haven't seen it so far here in these tickers. If you go back and look, the day that we did a candle like this on AMC, we whipsawed the whole thing, right? GME, it was down 40% in 10 minutes and whipsawed back. Those type of things are not happening here if you look at the intraday. And so the reason why this is important, because who's trading this? Retail. They're trading it differently than before. What does that mean? It means they must have learned something. Seems like they might have learned a little something. Before, when they'd be selling a lot more rapidly, they've actually learned to hodl a little bit, right? And you can see it in the price action, the way it's trading, that there's a little bit more holding going on here. It's not as active. There's a lot more just sticking to the buy side, not the sell side. Again, I sold my first half of, again, I bought down here the day before earnings. I sold half of them here on the resistance. I'm still holding the other half. I didn't even sell it today. I was looking at this and I was looking at the candle. I'm like, you know what? In terms of a ratio of the upper wick here to the body of the candle, if it was a lot larger, price pulled down a little bit further towards close, maybe I'd be like, you know what? I'll just take it. I'll be happy. But it feels like there's more. And so when we look across the pond, Jimmy, pretty subdued. Again, this is so supply heavy. It's going to take, it's going to take everybody in the world to buy it to cause it to really move, which, I mean, technically it kind of is, but in that case, but we didn't really see it move. When we look at things like BB, that obviously put points on again today. We just were looking at this chart from yesterday, put a lot of points. BBY was interesting. This pullback was a really nice opportunity from the open. The pullback, the candle in here is pretty nasty. This is quite the volatility, which is exactly why I wanted to look at it. It's one of those tickers that's in a different area down here, has a potential to do more. But we're on all cylinders for the meme economy, so I'm very excited that we're getting back into it. Tomorrow's gonna be a blast with the meme stocks, and they do have an effect on the rest of the market. Not really in the sense that the spot VIX is going to change or the average will go down. But when you look at the average, we were completely break even today, right? Completely break even. And we see this a lot. The market will trade flat and trade sideways while we have a ton of demand going elsewhere, right? When there's just sort of nonstop and unrelenting volume during even lunch, right? It causes this sideways trading. Now, you can see after hours, we're climbing after hours, we're right back to where we opened, right? So quite literally a sideways traded day. All the price action, or really the gain, all came from pre-market. I've talked about this quite a bit this whole week. I'm going to say it again for tomorrow. You're very much in a territory where you're going to continue to get this chance of a gap up. That's where we are. When you look at what happened today, we were very uh, value focused from pre-market after 8:30 when the numbers came out. Economic numbers were good. Claims were down. GDP looked good. Again, it was more towards the people spending sort of side. All continued with the inflation. So value did very well off the start. We see things like banks doing over 1% today, right? Banks doing well. We're about to test that high. Looks like we're about to break, most likely tomorrow. So value looks like it's ready to get to its all-time high tomorrow, right? Now, what about tech? So tech opened a little bit lower to start the day. Again, value getting most of it, but again, it's break even here. The big thing is in this scenario, this is a little bit further behind, but it's traded flat and not lost any points whatsoever. Those mega caps are what move the average. When we talk about the market reaching all-time highs this week, tomorrow is probably well over about 75% chance that it's going to happen. When you look, S&P is about half a percent from all-time high, right? And you look at something like Apple here. Apple took off 1.25% today. All it needs to do is put it back on. It puts it back on and the market's at all-time high. So when you start to look at some of these now, again, the mega caps were all over the place comparatively today, which is great. Again, when you get a little bit of differences here, it allows for a lot of different sort of possibilities. And if you're trading all of them like I am, I'm just sitting in those positions. It allows for you to gain on different type of days, right? And it covers different areas. Facebook, for instance, is the sharpest of the bunch. It's really rallied and pivoted the most out of all the tickers, and it has this God knows what's happening in here sort of vibe. Very nice the way it's been moving, and it's pulling that whole Twitter out of the grave. It's pulling Snap up with it, right? That whole side's doing well. That's good for all of those trades that are like that. Things like Netflix and the like that are in those lower range areas that you need a leader like this, and we saw it before, right? The other two, Google and Microsoft, being the big acquisition heavy companies, right? These are looking very good. All these need to do are put any sort of positive numbers on tomorrow, and we will be at all-time high. What happens when we hit all-time high on the average? Well, all of a sudden, you're about to just remove your supply, and you're about to go very demand heavy. It's not that we're going to rally, but it will be just one day, right? I'm not saying that we're going to do again, this move here where we talked about this breakout was just, it was too much too quick. We're only looking at one day tomorrow, right? So it's going to be one day of price action. If we go into all-time high on the S&P, that's new demand across the board that can just lift everything. Those mega caps all of a sudden get more demand. You just had retail enter the scene really this week. It got hot. We knew they were entering before, which is why we took trades that we were preempting, right? But now that it's real hot, the demand is here. Once you remove that supply from all-time high, when we reach all-time high, everything gets brought up, right? And so that's what we're really looking for tomorrow. It's going to be imperative that we are ready to sort of face the consequences of putting a lot of points on quickly, right? Which is you're going to take some profit from there. That's from wherever you entered. Those of you that, again, just re-entered on this low buy, we are in a very, very strong spot. We don't want to be in a situation, though, where we have to make a decision whether we can continue to push it. We have to like sit there and do nothing. This is where we've talked so much about transitioning. Take the money home, right? I'm sure just about any of you that were in Ford, GE, BA, AMC, for instance, these type of trades that just put points on immediately, of course you took the money home. You probably did it fucking a week ago, right? Like I did, right? And then you put the position back on. You continue with it, right? It's really important to be doing that here because we are in a slower moving market right now. We know that we're in a value heavy, sort of inflationary, uh, unknowing when things might change sort of situation that is just going to cause slower buying because people are buying long term. When you get things like this, that is very rapid pricing in a very short amount of time, it's going to want to revert to the mean, which means we want to trade it in this area and capture it, which means you're going to have to take profit at some point before it starts to come down, right? And you don't get to know when that top is or anything like that. Always push your winnings, but a part of pushing those winnings is taking the money home and actually winning, right? And so, in a lot of situations, you want to make sure that there's plenty of things that I can do in terms of holding a position and pushing it, and then just throwing more money on it and really continuing with it. It's another thing when you're not really sure, and I'm sure a lot of you have felt this. I felt this on some charts where I go, I don't really know what's happening here, and I just got like 6-7% today, and I don't really know why. And my contracts are getting hundreds of points on them. I'm like, what is going on here? If you feel like that, the best thing to do is just take the money home, put it in your bank. That's it. Because so much of it is just, it's so hard to tell when we've been trading all of these long-term positions, right? And we just turned the burner on, right? Just in the last 2 weeks or so, when I've been talking about retail and putting a little bit more risk on some of the growth charts. That's a very different thing compared to the very long-term situation where we're just sitting on things, not doing much, trading banks, energy. It's just kind of trending up all the time. This is very different, and we don't have that sort of supply that we had before, which was when everyone was just trading short term. Right now, it's very specific, and you got to be careful, right? This is where I've talked a lot about when you look at open interest volume. Today was extremely volume heavy. When you look at the ratio, we are at much higher volume to OI ratios on options because again, what's happening with the underlying price? It's all being speculated on. A lot of speculation. Retail starts speculating. The options are already a speculative vehicle, the derivative, and now you're in this weird situation where what kind of speed are you betting on with options? It's already moving fucking fast, right? It's already in a situation where it's moving at just about as high of a implied volatility as it can. It's not going to go any higher, right? You're probably already deep in the money. That's when you got to go, okay, at this point, I'm only going to gain 1-to-1. I might as well just take the money, right? And it's never a bad thing. And it's, again, I can say push your winnings as much as I want, but never criticize someone for taking profit when they do. And so anyone that's has FOMO because you guys took profit early, I took profit early on plenty of positions too. Even though I feel good that I re-entered, doesn't change anything, right? Take the money home tomorrow. Just go into the day, right? There's no more, oh, I'm going to keep buying. Listen, you missed your chance. Those of you that just today woke up, you just woke up, right? You got bedhead and you're looking at some of these charts and you're going, oh, yeah, perfect. Good time to buy, right? Listen, we do this every week. When there's a pullback, we buy the pullback, buy the pullback, buy the pullback, buy the pullback. Sometimes we have to buy the pullback a few times, right? Got to buy it multiple times. We bought it 3 times through here, bought it again, right? You don't now get to go, you know what, this is a good time to go put some out of the money calls, put the Junes on, and go buy them, right? Because now I'm selling them to you. Other people here are selling them to you. And now you have no clue what you're doing, right? Because things right now are at the most volatile time. The only thing you could theoretically do right here as we enter all-time high, before we get, again, a pullback to enter on or a breakout. Again, if you get a breakout, in those situations, you can put new positions on. The only thing you can do here is take advantage of the very high volatility in this moment and put long positions on. The thing is, though, we already have the long positions, right? And so this is where it depends on you. It depends on what your portfolio is. If you've been doing what I've been doing, and we've been putting these long-term positions on since March, if you have those long positions and you're sitting on them, you don't have to buy them again, do you? You're already in them. You're watching the market go up. It's great. Those are great positions to have. We've sort of dodged some bullets by exiting Bitcoin, those sort of things, so we were able to put the money in. Right now, we're taking advantage of the short-term volatility. We've been buying things like travel, buying things for retail traders coming in, things like AMC, right? trading Ford, rebiasing it, right? Or removing the bias and trading it as is. These kind of things. That's not portfolio building. You're not going to fill a portfolio of a bunch of meme stocks, right? It's important not to get there. Don't get to this point and go, okay, you know what? I'm going to take profit on those long-term positions. You know what? Fuck banks. Fuck REITs. These are moving way too slow. I'm going to go buy a bunch of junk and a bunch of shit. And there's a bunch of these meme stocks that are still at lows. And I'm going to ride them to highs and I'm going to take advantage, right? Because it's going to keep happening. And I bet it's going to go from here to there. When you start to do this weird little ratty dance, right, where you think all of a sudden that since things are volatile now you can start to make swing trades and make 100% a day, you're going to get fucked and it's not going to work. We are not in that market. This is this little area right here. This is its own little place right now. It's its own little place. And guess what? It'll go away. It's going to go away. Go back to the beginning of the year. Over here, it went away. It went away, right? And it doesn't even look like much happened on the average, does it? Well, in this area, January, it was psycho, right? We were, God knows what was happening. It was World War III and everywhere, right? The volatility, we were reaching IVs of like 800%. It was costing thousands of dollars to buy the deepest out of the money contracts. Like that kind of thing, it's not going to happen again. It's not going to be the same sort of thing because if you look at the way things are trading, they're trading a little bit more thematically because retail traders, at least the ones from before, have learned a little bit. Those coming from crypto are not looking to go through what they just went through, right? That's not what they're trying to do. And so, yeah, we want to play with a little bit of the volatility, but it's not our portfolio and it's not our game. All we can do is we bought on the pullback and we just got paid for those moves. We did not buy these to join the game, right? I didn't buy AMC because I wanted to become a meme. I bought it down here with a few other tickers, if you remember. For instance, GoPro, which ended up not working as well. But if we go look at that chart, it's not doing too bad either, is it? But it was a lot different through here, wasn't it? Right? And so, again, when we took these trades, they were a little different. Everything at that point was a little different. This is not moving because of memes or anything like that. But again, things that we've done from before, you can't now apply them. It's not like, oh, I can use the logic from a month ago and now I can apply it to right now, right? That's not where we are. Things are still slow. Look at the average, compare that for a bias, and then look at your tickers and see, okay, this is the reality. Now, with that being said, it's still extremely important for us to realize that we use that strategy, but we're trading through individual tickers and we're trying to trade their velocities, and every chart's different, right? And we look for velocity that's above the average because we want to gain alpha. We want to build a profit off moves that the market's not pricing in. Again, if you're buying options, you are betting on speed and a price point over a certain amount of time. If the price is at one thing, like GE here was at 13, and now the price is at over 14, well, it seems like GE wasn't priced correctly. Now, was it? And that's sort of what we do when we look for these breakouts. Now, sometimes it takes longer, right? Sometimes these things take longer. The best example is BA. We did this multiple times, and now we finally got this move on Friday that really hammered it home, and we knew this move was coming. You got to get involved, right? You get in there, and you see it in the price. You have to take advantage of it every time. You know how many times I bought this chart over the last few months? I bought it a lot of times, and guess what? It didn't really go up much for many of those times, but you didn't lose much from there. You gained a little bit in some areas. You didn't lose much from stopping. And now this move here, well, now you have a chance of really gaining a lot, right? And so it's these kind of charts that, again, they're not going to go away, right? The big blue chips, they're not going to go away. BAG aren't going anywhere, right? The travel trade, even though it's a little bit more, short term in terms of its ability to put points on, this isn't going anywhere. Airlines are not going anywhere. It's not a meme. It's not a joke. And there's true value in these charts because the economy, again, can only rebound once, but travel has not fully rebounded. These things have not fully picked back up in terms of price on the equity side. And so we have a lot of pricing to actually put on still. We actually have quite a bit of ways to go. And so these charts, they are moving in a very similar way, but they are not the same thing as AMC or GME, right? These are very different charts, and we trade them, yes, in a very similar way and for the exact same reason on buybacks or breakouts. But this is something that can be a part of your portfolio for a longer term and you want to, as opposed to those others, we're trying to make the quick buck and get out, and we're trying to take advantage of, right? It's important that we stick to the risk management side of things, protecting our downside, which means cut that other bullshit out when we can, profit profit from it, but cut it out quicker. This kind of stuff we want to be, of course, having it a little bit more, have it be a part of what we're doing, and so travel looking very good. Again, we consider these things that are value to be the highest priority right now. This did the best today. I know we had a lot of charts that put a lot of points on it. It looks crazy, but the value side had the best day today. That's the reality. Banks, energy are still leading the year, right? Now, energy, what did energy do today? Oh, it was break even. It's still having the best time. There was a little bit of volatility because of news. It's good for it. There's nothing wrong with the news that came out for it. It stops it. But these positions won't hurt you. These ones will continue to grow. Use this to build your portfolio. And with the rest of the money, it's play money. Things like AMC and shit like that, right? And buying momentum when you're not supposed to be, right? And taking risks, right? Right now, I'm 90% value, 10% growth through mega caps. And within that is, again, the play money for the rest of these positions. I think that's an important way to stick with things. And so keep that in mind. Want to mention UA from yesterday, from today. I put the chart out from the breakout yesterday. Yesterday, we saw a lot of retail stores make a lot of volatile moves. It's nice to grab a trade like this when you have a day like yesterday, sort of signal to you that there's going to be more chances because, again, you sort of swing one way yesterday. That's going to cause some sort of swing somewhere else. Again, we saw things like pharmacies down. We saw things like Nordstrom down. These sort of moves that were all over the place. Some of the retail stores were up, some were down. If one of the charts didn't do anything, something like UA here, but it put bid on, it's probably a good signal that's going to go to the upside. Even a move like this, 5% is a lot here, right? 5% is a lot here. It's hard to talk about it after those others. This is a great trade here. We saw from the open, it sat there. It just sat there. You have plenty of time to go put it on, and here you go. You trade right up to resistance. It's a 1925. It pushed through a little bit. It tested it down into the close. This sets up a great sort of day tomorrow where you get to choose what you want to do, right? You have a candle that just pushed into resistance. It's possible that if it rejects that open, that you're going to take profit on it. Or if it doesn't really move, you can just sit with it over the weekend, and it's a great trade. There's a lot of things that look like this, and almost you should not be buying anything right now and trying to sell it the next day or same day. Everything right now should be longer than that. But just putting into perspective that this thing did put a lot of points on, it is possible that you can do that in some areas, right? And definitely, if you're unsure, take it. Take the money home. You just made money. Take it home. There's nothing wrong with it, right? You can always re-enter, and usually a good confidence booster to be able to continue to buy. Again, charts like this they don't look like the rest of the market, right? You're not in a position where it's like, oh, well, I missed the low. Now I can't, you know what? Now I can't really get in. Now it's too late, right? If you feel like that, there's always a chart for you, right? There's always something out there that you can go buy right now that doesn't look like it's just fucking taken off, right? And that is going to put points on it. Just, you missed a little bit of it, right? It's going to happen. For tomorrow, it's going to depend a little bit on where we open again. I want us to look at what happens with China. The Chinese tickers are just they're all over the place. And it's hard to tell what exactly we're doing because we're getting jerked around again. Obviously, we were looking for these trades. We got a lot of bid, and then we had a lot of moves going all over the damn place. And you look at something like JD here, it's trading flat, and it's giving you like these ominous sort of signs of what's happening. Hang Seng is bullish. And so this is one of those weird situations, again, where there's bullishness in this market, and we've seen the numbers look good, but then the tickers on our side, on the New York Stock Exchange, are kind of just turds. They're not doing anything, and it's hard to tell what exactly that is. it's important to still keep in mind that these kind of things are what dictate our opening prices. You got to take in mind that we just put a lot of points on today on some of those tickers. They're probably going to take a little bit of profit come pre-market. That can cause us to be a little bit lower. If that's the reason why we're down, then there's still a very high chance you're going to go very bid off the start, right? The average is down because a lot of uh, the big tickers from today in terms of gains take profit. That doesn't equalize to the fact that things like Apple were down today and are going to probably be up pre-market and go very bid from the start. So we want to be careful on what exactly we're doing tomorrow. I don't think anyone's really buying anything, but on hitting that sell button, I want to be careful on what exactly we're doing. I don't want to rush things, and I don't want to get going too much, and I don't want to make mistakes going into the weekend on big gains. I still have, we talk about things like Ford, GE, these kind of charts that took off today. I don't want to be in a situation where I push these and lose it over the weekend. So I want to be careful when we look at the open and make sure that we're on the right path and that it's something sustainable, right? This kind of candle, GE has done nothing. I think it's a great move, and I think it's going to where it's supposed to be. I want to make sure that we don't make a decision that goes, well, yeah, that's what was supposed to happen, and then come Monday, there was signs that it was not going to be able to hold that level, and we could have just taken the profit anyway, right? So again, keep that kind of thing in mind, and that's not to put fear into the positions, but uh, there are so many different things that I think can happen in terms of the way we're looking at the economy, the way China's reacting to different regulations, and then how the tickers are trading here, and then looking at how the retail traders are coming in. They're going to take away attention from a lot of things. We have so many things happening politically. We just got a new proposal by Biden. We're going to be at $6 trillion spending wise for 3 different plans. $6 trillion fucking money spent is so much money. All of these things are all happening at once. Inflation pressure, economic numbers look good. No one gives a shit about COVID anymore, but we do. And so, like, there's a lot going on, and it's all very hot, right? It's very hot, and we're getting going, and we keep going bullish through all-time high. We want to make sure we're actually making money off it, right? We got to, if it's going up, we got to make money on it. So we're going to make sure that we're min-maxing everywhere, protecting downside. I'm not losing a damn dime, right? I'm not losing a damn dime on anything. So that's going to be the easiest way to look back on this time period from January, which was crazy, full of psychos, to now halfway through the year. It's about to be the end of the month, and we're going to be sort of halfway into the year. I don't want to be in a situation where I'm not up how much the market is, which the market right now is up 30% on the S&P since election. That position, you better be up at least 30%, or else there's no point of trading. There's just not, right? You just put the money in the S&P, which is why I've converted some things over, right? So we'll see. We'll see what tomorrow brings. I'm just excited to see again what everyone brings out, because it was so much fun to watch today, and I think being a part of it's a lot of fun. It's obviously nice to make money and to be in that position, and that's one thing. But just even removing that, it's just exciting to have so much action, right? There's so many things that can come out of nowhere and make moves, and this is where you got to really keep your eyes open. And this is why I'm gonna look at, every night I'm looking at every single chart in the market on every exchange, looking through every single one, see if there's something there, because it's those positions that just you find one of them and then it's gonna be gone, that you can go trade it and make the money on it, right? So tomorrow, look out for some more charts. Maybe we'll get a couple more ideas come pre-market. Maybe some weekend trades that we haven't put on yet. So, that would definitely be nice. So I haven't really looked at much yet, but I was having a little bit of fun. Would it be safe to think that with the recent market behavior, taking early profit is a lot safer than continuously pushing positions? That's yeah. That's basically the thesis of everything I just said, right? It certainly makes more. That's and it's a depends question. But if you bought from a low position, then absolutely, absolutely, because again, we're in a position now where if you bought from the low, you were at a sort of a low volatility volatility area, excuse me, and now we're at a very high volatility. There's not much more you can do with that position, right? Uh, and you can always, after you take profit, get back into it and it gives you the option to buy on the pullback that comes through, right? And so what we've seen is that as the market goes to the upside and trends to the upside, you're gaining that average. But you know how you gain more than that average? When it pulls back every time you buy it. The only way you can do that is if you've taken profit, because where the fuck are you getting the cash from, right? Most of us here, again, we're just sort of rotating that capital back and forth. Even I don't have cash just sitting around that I can go buy another pullback. I got to take profit on something. Since we're so heavily on the long side, these riskier positions are icing on the cake, right? It's icing on the cake. The worst thing to do is to fucking throw it on the floor. Definitely take it, right? Take the profit when you can and when it's given to you, because guess what? This was not expected. That's why we call it volatility. This is not volatility that was priced in. Yes, we wanted things to move like this, but again, it wasn't priced. And so that's where those things are out of the ordinary. They're above average. Things will return to a mean. We are in a slower market. Portfolios are not going to change because of fucking memes and because of positions that just put, again, one chart putting points on does not change the average. It does not change our mentality either, right? We go into those specific trades with that mentality. We don't let that form our sort of overall strategy. And so the profit button is absolutely a key sort of a key point if you are in a position that you can do so, right? If you bought, again, I mean, if you're momentum trading, then you're kind of doing something different. So like, I can't give anybody that bought today, like halfway through lunch or something, like you're just doing something different, right? There's nothing wrong with that. There's nothing wrong with momentum trading, but it's just something different, right? I don't do that. I'll buy at a low, and if it doesn't go up, then I'll get out of it, right? And then if I'm gonna capture it, then I'm gonna damn well capture it. I'm not gonna watch it go down and hold it and say, make a Reddit thread and go, listen, I bought in at 10. It went to 50. Now it's down to 8, but I'm fucking holding because it's going to go to 100. I'm never going to do that. I'm going to be in and out and be like, well, I'm consistent, I'm disciplined, and that's why I have fucking money, and you're broke, right? We all want to continue to add and pad the stats. It's really easy to pad the stats when you get just long-term positions, and then you take wins like these, right? These are the ones that really put the points on. Go look at some of those options if you didn't. Some of you that were not in it, it'll make you sick. Some of them are really stupid. Like, again, just stupid. It's absolutely a sign to get the fuck out. If you have something that doesn't even make sense. How does a percent go above 10,000? Doesn't even make sense. How does that possible? Who is out there bidding past it? Doesn't make sense. The price hasn't even, it barely moved, right? Those are the signs that you go, okay, let me get out of here. We'll see if that happens tomorrow, but I think we do have quite a bit of ways to go. I think there's a lot of energetic people out there. There's a lot of bullishness. There's $1 trillion that came out of Bitcoin. $1 trillion. That's all short-term, ready-to-mingle money. That $1 trillion was not spent this week. There's plenty of cash out there, so I'm sure we're gonna get plenty of fuel for this fire. I'll see you guys in the morning. Enjoy your night, your afternoon, evening, wherever you are. And until then.